The Construction Market Guide is designed to provide contractors and construction executives with timely data on the economic environment, materials prices, and the labor market so you can make informed decisions that increase profitability.
Let's talk about materials prices. With all the talk about inflation, what gives with prices going down in materials? Take a look here. Over the last year, the price of oil has gone down 11.95%. Raw steel is actually down 2%. Iron ore is down almost 2%, and lumber is down 8.4%. Compare that to the overall inflation rate. We see prices had been increasing, inflation, at a rate of above 9%, and it's come all the way down to now it's at about 2.5%. Some over the last 1 year, it's about 2.89% inflation over the last year. So what gives? Why are we seeing deflation in materials prices while we see inflation in the economy overall? Well, I think it's really caused by a couple of factors, but one of the most significant is international markets. While the Federal Reserve in the United States is the central bank here, they've been holding interest rates steady, now talking rate cuts. We've seen rate cuts already over in Europe, and we see real weakness in China. Take a look at the Chinese stock market as compared to the U.S. over the last year. The U.S., as measured by the S&P 500, is up over 25%, while the Chinese stock market is down almost 6%. So they're seeing a pretty tough economy over in China. And that's when prices are set by supply and demand. If there's a fairly constant supply and a big reduction or less of an increase in demand, particularly overseas, the prices go down. And so I think that's what we're seeing with materials prices. However, it's a different story in the labor market, and it's a different story for supply or for services. The services sector there's still a lot of demand for things like travel and restaurants and services, and so the prices of services continue to increase while prices of goods are increasing at a lower rate, and raw materials are even seeing some deflation. So what's expected here in the United States with interest rates? Well, the Fed is cutting, or is expected to cut. So we can see what they call their dot plot, which is their projection of what they think interest rates will do in the future. And you can see the gray line or black line there is the historical numbers, and then the dotted line is the projections of what they think interest rates are going to do in the future. One of the things that supports the idea of rate cuts is new housing starts. And if you take a look here at this chart, the numbers for July are pretty significantly off what we had seen in the past, with less new houses being started in July. So it looks like we need some rate cuts to keep the economy from slowing down too much. It was running red hot. It cooled off a little bit and was still running strong, and now we're starting to see potentially some signs of cooling, a little bit of weakness. However, the biggest thing that affects people's spending is their employment, and the unemployment rate is still really low, and it's lower in the construction industry than it is across the economy as a whole. So overall in the U.S., the unemployment rate is at 4.2%, but in construction it's at 3.2%. So it continues to be very difficult to find skilled workers in our industry. You can see the wage growth rates. So if inflation is under 3% or around 3%, as we just talked about, what are wages increasing by? Well, take a look here. The average wage increase annually in August for this year over last year is 4.1%. So people are still seeing pretty strong increases in their wages, and that continues to boost spending across the economy. So everybody's talking about the election. Well, I thought we could take a look at the U.S. stock market over the long term and evaluate that and say, well, how does the market tend to do better under Republican presidents or Democratic? Well, take a look. Here's the chart, and you can see that over the last 100 years or so, we see the economy do pretty well either way. So companies are pretty good at figuring out how to make money, and they tend to make money no matter who's president, with the possible exception back there of Hoover. Looks like you shouldn't vote for anybody named Hoover. That was, of course, the Great Depression. So as we see recovery in the economy as a whole, We see some signs of things potentially slowing. We're encouraging clients to be cautiously optimistic and to maintain enough cash so that if they do see a slowdown in their business, they'll be okay. And if we can help you with planning or investment management or retirement plans, please reach out to us. We're happy to chat. Thank you.